Bring that ass back like a boom, 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 boom.
Alright folks, since we've had some questions about how do we scan for the setups that we trade and what are the setups that we trade, we decided to make some videos trying to expand on the topic. Now each one of us have different ways to scan, although we are looking for basically identical setups. And it's not just us, like if you're looking for all the great traders of our lifetime, so to speak, they are basically looking for similar things, so we're no exception in this regard. So do have 4 different setups that I trade, and the first one that is arguably the most important for me, and it's my bread and butter, so to say, are the consolidations. Now I do scan for consolidations on the weekly and consequently on the daily, but for me the most important focus comes on the weekly charts. Now I want to make something very clear from the get-go. Consolidations for some people are called squeezes. Some people call them volatility contraction patterns or VCPs. Some people call them bases. But all in all, we are talking about the same thing. These are consolidations. These are strong formations that provide support for a move upwards, or if broken to the downside, provide some effortless moving to the downside. So, as I said, I look at the weekly and the daily, and here are the basic requirements for a consolidation for me to look at it. So we need a multi-week formation, speaking about the weekly charts, and if we're talking about daily charts, we need a multi-day formation. So 6, 7, 8, 10 days would be okay. Consolidation of 3 days, not so much. It's still early. Price have not come to an agreement. Where should it go next? So these are very short and I don't look at them. So I need multi-week formation, at least 6 weeks in length, or if we're talking about days, ideally 5 to 8, 9 days. In terms of depth, for the weekly chart, I'm looking for a depth of no more than 35%. And how to calculate this, I'll show you on a chart, but it's basically a 35% retracement from the top of the base information. So if the price makes a move to $100 and then moves down and start consolidating, I'm looking for the price to not drop below 65. So basically 65 is the limit that I'll be trading. I'll be looking at this formation as something that is okay to trade. So the price should go from 100 no lower than 65. This is 35% depth and good fundamentals. Now I will start by talking about how I come up with the good fundamentals, and then we're going to look at some charts with weekly formations, depth, and some ways to enter, because although you have this consolidation, you don't know when this consolidation is going to end. You don't know when to enter in order to actually initiate a trading position, because for all we know, these consolidations can last anywhere from 4 or 5 weeks up to years. Like we had this recent consolidation in gold trying to break out to the upside. It's been going on for a week, for a year and more. So you need this tactical edges where to actually place your trade and start accumulating shares or options within the specific asset. So this is my introduction to consolidation. Now let's go and see how I find the good fundamentals, and we're going to take it from there. All right, guys. So talking about fundamentals, I get all the stocks that I need to trade from here. This is Marketsmith by Investors Business Daily. It's a wonderful tool to actually filter assets by their fundamental performance. And now this is how the basic website looks like, and to actually open the platform you need to click here on launch charts. Right now it's relaunch charts because I already have them open. So once you click there, this is how it looks. And it might look a bit confusing at the very beginning, so I'm just gonna hide all those screens right here so you see what I'm talking about. So this is a daily chart, and let's just pick a ticker that we all know, for example, Apple. So this is how the chart of Apple looks like. Now Marketsmith has some pre-built pattern recognition software, and it can show you bases, cups and handles. Like for example, this wonderful formation right here, you see it's a cup and handle. This says 3 days. Stage 3, it's 7 days, pivot, length, depth, 12%, and so forth and so forth. That's on the daily chart. So this is just Apple. Like you're looking at the daily chart, you see here it has earnings per share, it has price, high, low, EPS rating. These are proprietary ratings of Investors Business Daily and Marketsmith. But for me, what's important here is the weekly chart. So I'm going to switch to the weekly chart, and what you will see right here is the earnings per share, the sales change, how they go through the quarters, and that's the weekly chart. So I don't go over charts in Marketsmith as much as other people do, but what I do here is Marketsmith have this report, the Marketsmith Growth 250. Although the name implies we're looking for 250 stocks, in reality there are 300, but it doesn't really matter. They update this Marketsmith Growth list every week. So it's once a week on Friday, I believe. They update it, and we have it ready for the weekend, so we can do our studies on the weekend. Now what I do from here is I go here, a little toolbar, and I export it in either Excel or a comma delimited CSV file. And from there on, I combine a list with all the scans that I do. One huge Excel spreadsheet usually holds between 500 and 1,000 tickers per week. And then I'll show you how I scan for consolidation themselves. But here, what Marketsmith is actually giving me are fundamentally sound tickers that I can expect to move up. Right. We've also created some scans that we have right here, and I also take stocks from these lists as well. So for example, we have top relative strength. Now this top relative strength, if you open here at the edit, you will see our screen summary here on the right. It shows that we need our relative strength rating of 89 or above, but then we also need 3-month relative strength of 89 or above, and then we need the 50-day average volume to be above 100,000 shares traded. So we come down to 509 tickers, and right here at the bottom you can see they're listed. All of them are listed. I go and do the exact same thing. Export, paste in the same file. Then I look at other screens that we have right here. Like for example, I really like this potential monsters. It usually returns not a lot of tickers, but I really like it. So if you look at it right now, what we have right here is GFS. We have HCC, Harmony, we have KNSL, we have NCSM, we have PLIM, RXDX. This is Biosciences. I almost traded this but did not, and that was a good thing because it failed for the breakout of the right side. We have Ryan, WHD, and one of my favorites, ZIM. I also currently hold this one. So I do the exact same thing, and as I said, I combine a huge file with all the results right here. You can see this is the Marketsmith screen creator. They have their proprietary rating, the EPS, earnings per share rating, the relative strength, SMR rating, AD. This is like whether the stock is added or sold, composite rating, industry group relative strength, highest being the one. They have other things like earnings, quarterly changes, earnings stability, lots of things, like really a lot of things you can do right here. Industry and sector, what sector groups to go for, margins and ratios, a lot of fundamental things that you can look up at too. But of course, this comes at a cost. Now, here we are at Boom Traders. We pay for the yearly subscription, so you don't have to. We bring you this information and much more valuable information. And that was our goal when we first started our service. Many of the people that we're talking to, they like one thing or another thing, but we as traders cannot afford all the tools that we want. So we as a group subscribe to a lot of different tools, and we provide you with some information from there. We help you with your trading process. So that was the initial idea all along. Now, once I've created my Excel spreadsheet from all the screeners that I run here, and you can see there are like quite a lot, I go to TradeStation for one, and Thinkorswim for some other things. Now for consolidations, you can screen them in TradeStation or Thinkorswim. I know Tintin is using TradingView. Ted is also using TradingView, so you can do it there as well. But I'll show you how I do it on Thinkorswim platform in just a second. So Marketsmith covers my good fundamentals. And just a note, I want to point out this one right here. We're talking about stocks that are going to the upside. You don't really need all this fundamental stuff for stocks that are breaking to the downside. Like, many people have said that, and I find this to be true as well. For the price of an asset to go up, you need to have buyers. But all it takes for the price of an asset to go down is lack of interest. You don't necessarily need sellers. You just need people not to buy it. You know, disinterested people who think that I don't need it right now, or it's not setting up for me, they're not going to buy it, they're not going to sell it. But that is also means that there's lack of interest and the price is likely to go down. So let me take you to Thinkorswim and show you what exactly I do to scan those consolidations, bases, squeezes, VCPs, whatever you want to call them. So the first thing that you need to do when you go to TradeStation, and this is the basic window of Thinkorswim. I'm set on charts. What you need to do in order to start working with the watch list that you've created in Excel from Marketsmith is I do it right here. I don't want to pull other windows. Now I come right here, and here you have watch list default. All you can do is click here on the default, and it will pop up a menu. You can do create watch list or edit default. And now if you see, this is my default. This is where I paste everything. So basically every week I just copy the symbols from my Excel spreadsheet. I come here to import. I click on paste symbols from clipboard. Now there's nothing to paste here because I haven't selected them right now. And I just do OK. Now I'm going to click cancel right here, but you can see this is the watch list that I have for this week. Now I don't watch it actively, I just scan for things. So once I've done that, I start the scanner and I go through all the charts. Now let me go with you through some of the charts and see what I scanned for. So here's the scanner. All we do here is, as you can see here, we're scanning in default. So default watch list is the one that I've created with all the tickers that I've gathered from Marketsmith. I scan for stocks that are minimum in price $5, but as you have probably noticed, most of my scans in Marketsmith are for stocks that are above $10 or above in value. Anyway, I just keep that one right here. So so it's basically like a double filter. I also have the 20-day volume above 100,000, and then I scan for Squeeze Pro. And Squeeze Pro, this is set on weekly, as you can see right here, and it's on mid. So I don't scan for low or high squeezes. Actually, I scan for high squeezes because the mid squeeze includes the high squeeze, but I just scan for mid. And the Squeeze Pro is something that has, the low, the high, and the mid. But if you are using Thinkorswim, they have built-in squeeze that does have the mid selection only. So you can just use that one. You don't really need to use any paid indicators right here. And this one is just a simple moving average filter. So you have the close is greater than the 200-day moving average. And then the 50-day moving average is greater than the 200-day moving average. That's it. This is my basic scan. This is where I go from. And let me just not use 200 because I think there's more than 50 for this week. So I'm just using the scanner. And right now I have 113 results. Now I'm showing only 50 of them just to make it easier on the eye here. We have some columns that I have written myself. if you want to know more about them, just shoot me a message in the Discord group, and I'll talk about them. And some of them are completely my work, so it's absolutely fine to share them. Some of them do have some copyright material, so I cannot, but I can guide you how to make them. So I can probably make a video to show you how to make them. But anyway, this is what I get. So now I'm going to switch to the charts, see what my charts look like and how I actually go through these charts. Now, one thing that I want to mention, I get 113 results. This is the weekly squeeze. So basically I'm looking for squeezes on the weekly charts, and I go through all those. Like, this is 113, that's not too much right now. Last week we had quite a lot more. This week the market broke down, so well, not completely broke down, but the market hasn't been that beneficial for squeezes. So we only have 113 charts to go through. Not a lot of work. I usually do this on Saturdays, and I set alerts. So let me take you to the charts and show you what I do exactly. So what you see here is my usual chart setup. On the left we have the weekly charts, on the right we have the daily charts, and I've linked my screener to the charts. So basically I just go over each and every one of the charts, and for example right here you can see Boyd Gaming. This is the weekly chart. I look at it, it's a fine setup right here. We had some breakdown with the market this week on the downside, but it was caught by the moving averages. Now here, what you see here in terms of moving averages, this is the 10 weekly moving average. So basically that's the 50-day, the white line, and the yellow line is the 40-week or 200-day moving average. So basically we were saved, our setup is still intact, we're still in the basic formation, nothing really is broken, and this is actually a very nice wick to the downside, so we might be looking at something to go up. And here, when you come to the daily chart, I just place some alerts, like for example we have this downward sloping trend line, and we also have this resistance here on the top of the weeks, with this week here being like a really important set. So I basically have two alerts. If the price crosses above this zone, alert me with an email. If the price closes above this zone, alert me with an email, and that's it. I also have it set on my cell phone. It doesn't really matter. Sometimes the messages will come faster than the email. Sometimes the emails will come faster than the messages. I just use Gmail, so I think that works pretty well. Let me just show you how to set alerts if you don't know. But basically what I'm looking for is breakouts of some important zones for resistance on the upside. So let's just look at this CLDP. For example, if you look at the daily, right here, you can see that we are in the exact same formation. Now let's just draw some trend lines and see how that works. I have them snapped, and I have the trend lines here in the fast lane. So let's just see how it snaps. So we have this, then you can see it paints on the weekly as well. So we have this trend line, which is a bit concerning because it's rising trend line. I don't like those usually, but let's just connect those dots as well. We have this, and now we might be arguing that a break above this can be used as a trade. I don't really like it, so I'm not gonna do it, but the way that you set up an alert with Thinkorswim is I extend this to the right, so you see. And now what you can do here is just create alert withdrawing, and now you have to select here crosses above, and you say create, and then this alert is set. So once we cross this trend line right here, price crosses, you get an alert, and from the alert section you can basically select whether you want it to be on your email or your phone or whatever. Now I did the scanning yesterday, and I really didn't find anything that is super spectacular to look at. Now we had this, I think it's part of the scan, I believe. I think I have it. Yeah, I have this one, ACM. So ACM, like if you look here, there was like a trend line that was touched like right here and right here, and if you extend it to the right, right here was a good place to enter right on this bar. It was a good place to enter. You had a gap right into this resistance. It closed above the resistance also. This was a good place to trade it with a stop right below here on the lowest of this candle. Maybe a gap fill right here. But anyway, I scan for things like this. I set the alert and it hits. Now here's the tip, something that I usually do. You can see that if I set the alert right here, it goes above. If I set the alert right here and the price shoots up, I'll probably be catching it very late. So I see this trend line, and then I also add another alert a few pennies below, like here, and then I'll just create an alert withdrawing if it crosses above. So now I know that the price is coming to my point, right? I know that the price is coming to my point, and I can look at the chart. I have the time to look at the chart, set the limit orders, and if they get filled, I get filled. That's fine. I get the best price. Otherwise, I'll just have to chase the price on the alert. So I set like a price, it's called a price level. I set a price level below where my alert should be triggered, and I set another alert. So I know that when the first alert hits, hey, price is getting to where I want it. Take a look at the chart, and this is basically how it works for me. So I'll just remove those drawings. I'll remove also I'll remove the alerts. I don't need them. This is gone. So I really don't need to be alerted on this one. Just to look at it and be like, oh man, I missed that one. So basically that's how I go for consolidations. Now I do this on the weekly, and then I also do this on the daily. Now on the dailies, I also like to set alerts, but here's one thing that I want to make clear. I prefer to trade squeezes or consolidations on the weekly, and then go through different ways of entering when I'm on the weekly chart. So I look for the weekly squeeze, and from there on, I prefer the freedom of setting my own alerts, not using a certain indicator or a certain moving average to enter. So there are a couple of ways that I will enter, and one of them is a break of a trend line. So for example, if you look at, let's just do Apple, for example. So if you look at Apple right here on this weekly, this is the weekly chart. Let's look at the weekly chart. So right here on Apple, you had this consolidation. You see a double consolidation. And the way you enter here is, if you look at the daily here, you draw the trend line on the tops. And when you're looking to enter on the upside, you want to draw this trend line to the downside. So basically you need peaks that are coming down. Here's the basic structure, right? Here's the basic structure. As you can see, we have higher lows, but the highs are getting lower too. So we form something of a coil, a mini coil if you want to. And then once this trend line is broken to the upside, you can enter. This is one way. Another way is if we get a gap up above this type of resistance. So you have here the line of resistance, and right here, as you can see, this candle gaps right over this candle of right over the resistance zone, tests it to the bottom side, like pierce it back, and then just goes up. So I don't usually enter through the market. I try to enter closer to the end of the day, trying to see how the candle will form. But I would enter here on the close with stop low below this open right here, and that's one way to do it. So I'm looking for a break of this line. If we have a gap, that's even better. Another way to look at it is just a standard breakout. So if you look at this formation right here, let me just zoom in a little bit and show you what I mean. If you look at this formation right here, so you have a basic structure right here, and see if I'm on the trend line. So if you look at right here, draw this trend line, extend it to the right, so you know what I'm talking about, and just look at it, just like magic. I mean, it's touched once, twice where I drew it, extend it to the right, touched it 3 times, couldn't break it, 4 times, couldn't break it, 5th one is candle right here, right above it. So you enter on the close, you buy, you set your stop loss here on the low, and that's it. That's your risk, and reward is, I don't know, whatever it makes it. But these are basically the ways that I enter here. So I need a break of downward sloping resistance in the larger time frame squeeze, so or consolidation or VCP or base, whatever you want to call it. This is one way. The other way that I would enter is if we break the high of the basic structure. So basically right here, what you can do, another way is just get a price level right here, the break of this price level. This is the top, and I don't know if you can see it because there's a lot of reds. Let me just remove this and remove this drawing. So this is the downward sloping trend line that we drew. So I either enter here, stop again right here, or I will enter right here on the break of this trend line. These are basically the two ways. If we can break this trend line with a gap on top of it, so we gap open on top of this resistance, even better. But this is the way I look for it to enter. Sometimes I might have what we call our edge signal, or we might not have it. I don't usually trade on the edge signal alone. I need to have this basing structure. If I have an edge, I'll see if there's a break of a downward sloping trend line like this one, or if we're breaking the high of the basing structure. But this is basically the normal way to trade breakouts. So this is what I look for. As I said, these are the trend lines that I said in advance, and I just wait for them to break. Now, let me go over just my criteria for trading breakdowns. They're way more lenient. I don't spend my weekend scanning for breakdowns. I just do them right here on Thinkorswim, and I don't use Marketsmith criteria or anything like this. I just need consolidation. I just need some moving averages, and that's about it. So let me take you there, and then we'll move on to the next setups that I trade. Alright guys, so in terms of shorting, now that the market is in bearish stance, we have to be especially picky what we short, because we are right here at the support zones for the Nasdaq and the SPY. Also IWM, which is the small caps, is also in consolidation right now, so we need to be especially careful what we short. And this is my general scheme for shorting in consolidation range. I also have some scanners for bottom fishing, but I will show them in a different video that does not pertain to consolidation. So basically this is my consolidation scanner for the downside. We have minimum price of the stock is at $30. I don't have any fundamentals, so that's all listed stocks. Minimum price $30. Minimum liquidity for the 20-day average is 300,000 shares. We have still the squeeze for the weekly set, but I set it to low, cast a wider net. And I also have our edge indicator, which is right here. You don't see it right now on the chart, but you can see like my column is lit in red, so basically that's giving me an indication that I can short. I'll just show you the chart of this SRPT, how it looks, and you can see our edge indicator as well. I also have the Radiant Fire sell signal here issued. Now, if you don't have this indicator, you don't need to. You can use stochastics slow, overbought condition, or you can also use an indicator that it's. I think they have it in. They definitely have it in TOS. I think they have it also on TradeStation, TradingView for sure. It's called Fisher Transformers. So you can use the Fisher Transformers. It's arguably the exact same thing as the Radiant Fire. I don't want to go into the details, but it's the same thing. We can also build a column for you like here. So you have it in your search results, and you can really easily go through which one has it and which one does not have it. But basically that's what you need to know. Like we have a squeeze, we have those values for price and for liquidity, and we have our edge or Fisher Transformer sell signal right here. So let me take you to the chart and I'll show you what I mean. So basically this is the chart of SRPT, and as you can see, this red arrow right here, that's our signal, add signal, add signal, add signal. And as you can see on the weekly chart on the left side, we have this massive consolidation. Now there are a couple of things that I don't like right from the get-go looking at this chart, and this is this trend line. I think let me see, snatch, extend to the right. Now this trend line here will act as some support, It acted once, twice. Here's also we have the 50-day moving average, the yellow one. It's below the 200-day, but I need a firm break below this zone to be able to short at. Last real high volume node was right here. We have one right here, and the other one was this one and this one. So if we go below here, that's the close is right here. It's right at this center. So let me just draw this as well. As you can see right here, if we cross that, this is the close, and this candle is really important because look at the volume. The relative volume right here is an indication of one. So once it's one, it's painted in green, and you can see all the important candles that I have painted in green, like this one right here. And let me just put a horizontal, they call it the time level. Yep. So let's just put one. Okay, come on. One level right here. The ones right here, and we have the last candle right here from Friday. So these are important zones. If I look at the chart from a bird's eye perspective, so I'll just zoom out a bit. We have one candle right here, and we have one right candle right here. And then I usually do that because those candles, the high relative volume candles, are usually good signs for either a breakout or a reversal or a breakdown or some support. Now, if it happens near some resistance, I know that it usually signals support. If it happens, if it happens around support, I usually think that this is support zone, so it will hold. If it happens close to a resistance zone, I know that most likely it's going to be a reversal. And now we have this huge candle right here. We have the edge right here. We have a very infection zone. If we break down below it, there's also a gap right here. So if we close below this gap, that's definitely a shortable place. So we need to wait a little bit. But basically, this is the way I scan. This is Google. It's also breaking down. You see, we have the edge, but I'm not definitely shorting this one. I mean, just look at the three indications right here. Right now, the price is at what is it? 1609, and all those areas are at around 150. So we have like $100 to the downside of potential, but the risk to the upside, if we measure that, we play it, it's almost 3%, but that's about 73, I'm sorry, not 37, but $73 to the upside with $91 to the downside. That's almost 1-to-1, so that's something that I can trade. If you go to here, AVGO, I also have like I showed you earlier how you can set some alerts for the trend lines. I have an alert for this trend line. If this trend line breaks, we might be looking at some breakdown to around these levels. And right here again, I'll look at the high volume candles like this one and this one. So if we place our horizontal lines right here, these are the two candles that did show some support right here, close to the 200-day long wicks. You know, it's support now. And this one right here, you see it tried to go up, but it hit this price level right here from this gap was above. So everybody here was a bit screwed. It gapped down the next day. This is definitely a resistance zone now. This one moved up to the resistance zone, moved back, but it was on huge volume. Next day, very negative volume. So we know this is resistance, and from here it's going downwards. So if we break this trend line to the downwards, I'm willing to play this depending on the candles right here. Basically, if we open close to this low or this close, we open and we have like 1.2 or $7 of risk, and we have about $10 or $63 of entire move. So basically we do have like around 9% gain to 1.5 to 2% risk, so that's playable. And I also have, as I said, the alert right here. If we close this trend line, the downside, I'm just getting in with a stop right above the breakout candle. So we'll see how this works. So basically, this is how I scan for a place to the downside. This is my thinking, what's going on here, what's not. I might play it. As I see, I've placed some alerts right here, and basically this concludes the topic of consolidation. Now, the things that I really need to stress here, I prefer breakouts to the upside. Why? I usually trade more to the upside. Now it's been a little bit, hard to find trades that are going to the upside, but I prefer to look at those trades. Also, one thing that I really find important is relative volume, like looking at the relative volume and how it plays out at key areas. Basically, just giving me some sort of a way to read the market. And what's really important to remember, and that's one of the first thing I think that if you're trading breakouts, you need to remember, is that if you're trading a breakout or a break to the upside, you need this consolidation right here to be either sideways or upwards. Now I know this might sound a bit counterintuitive, but you need this consolidation to be sideways or upwards if you're trading to the downside. Then if you're trading to the upside, you need this consolidation to be sideways again or downwards. Now usually Dow Jones, Dow theory suggests that after consolidation, the price will resume in the direction of the prior trend. So basically, why we're looking here for the downside? Well, because of this slope right here. So you have price moving downwards, then consolidating up, consolidating sideways, and then we expect the move to the downside. Usually the way you will project this move to the downside is basically 100% of the prior move to the downside. So basically you have this move right here projected to the downside from the break of the consolidation zone. Now, that's very important to remember. If we're looking for a breakdown, we're looking for consolidation sideways or up. If we're looking for a breakout, we're looking for consolidation sideways to down. You don't want to be trading breakouts if consolidation is happening with an upward slope. Just don't. So, this will conclude the episode for consolidations. Next, we're going to look at one of my favorite patterns. It happens very rarely, but when it does, it's explosive, both to the upside and to the downside, and it's called the high flag. See you very soon.